speaking of commodity prices, we'll move on to your
Yeah.
second stock pick, and that is Home Depot. This
Yeah.
company has seen commodity prices changing a lot over the last few years.
They have, and yet over that time, the company has increased their dividend by an average of 11.69% over the last 3 years. So again, company that's easily outpacing inflation. If you've been buying and holding the stock, the rate at which your dividend is increasing is beating inflation. That's what you want to see as an income-oriented investor. Now, the story with Home Depot, it's 26 times forward earnings. I put that in my article. That's a little bit expensive right now. However, I think what investors should be aware of is that you've been seeing a lot of movement in this stock in the last 3 months. Investors were kind of front loading this stock in anticipation of rate cuts, which are supposed to be very beneficial to the housing sector. So I think you have to take the valuation with a little grain of salt here and say, okay, they bid up the stock high. Now let's see where it goes from here. And unfortunately, because of the news we've just gotten this last weekend with Hurricane Helene and the major damage that has gone on in the Southeast United States, that's going to be a tailwind for companies like Home Depot and Lowe's, because their products are going to be in demand. I mean, this is kind of one of those where you kind of have to take what the market's giving you. And it's a sad thing, but it's also something that an investor can take advantage of, especially with a dividend payer like Home Depot.
Yeah, that's an interesting point that hurricane storm
Yeah.
season has an impact on these companies. But let's talk about the impact of
Right.
interest rates. That's been all everyone's talking about in inflation
Right.
and interest rates. And now that we've seen those come down, does that really matter to the bottom line of these companies? Are people really holding off on any projects until those interest rates come down?
That's an interesting point, Bridget. And I'm not sure if I would say, like a company like Home Depot or a company like Lowe's, I kind of would say they're kind of housing adjacent. They don't necessarily rely on interest rates, but it certainly is helpful for them. When you look at interest rates, you might look at the home builders. You might look at even companies like Zillow that are right there in the actual buying and selling of houses and supply and demand and all that. Companies like Home Depot and Lowe's, they can benefit even when people are staying in their houses because of remodeling projects and different things like that. But as we've seen over the last couple of years, some of that work is dried up because people did it in 2020 and 2021, and now they don't need to do that anymore, and they're going to stay in their house. So I think in this particular situation, yes, lower interest rates, which drive more housing activity, can be beneficial to Home Depot in this moment right now.